Hello everyone. I think we're ready to start. So let's get going. Let me just put the risk warning up. So if you're new to this is a session. We've started doing this 3 times a week. We did it on Monday this week. Wednesday is when we normally do it, and also Friday as well. We're going to try that for a few days, a few weeks, just to see how popular it is. And it lasts for about 20 minutes. We'll take a look at the major markets, so pound, euro, oil, gold, stock markets, the US markets, and the DAX, just to see what's been moving, what the levels are to watch for the days to come, the big events coming out, that sort of thing. I think it's been a really interesting week. There has been a lot moving, almost everything actually, apart from oil. Oil's been a bit quiet, but we'll start off by looking at gold because it looks like it's broken out of its major trend. We'll take a look at that. We saw clearly Brexit is never far from the radar, and that's very much back in focus this week. We saw a weaker opening for the pound on Sunday. It has bounced back, but it's given up a chunk of those gains over the last 12 hours or so. But that could be an opportunity. We'll take a look at that. And also stock markets. We had those massive sell-offs last week. Stock markets. We did see markets break lower. No, probably talking about break higher. Last night. Actually, to make sure everyone can hear me. I think there's someone saying that you can't hear me very well. Let me just check that I'm using the right microphone. Hold on a second. I think I should be. So yeah, hopefully it's all working. I'll just pick up, just in case it's picking up off the wrong microphone. Let me do that. Then we'll get started. Right, let's get going. So we'll drag over our trading platform. For those of you who are clients of Capital.com, we've done a big upgrade again to our platform over the last week or so. I'll just show you something because I really like this thing that we've got. I haven't seen this before on anyone else's platform. I think these days, lots of platforms do tend to look the same. But we've got this thing. If I look at pound US dollar just up here, we've got the usual change of the day, sell, buy, all that stuff. What we have is this sliding scale here. And for me, if you've been on these webinars before, I'm a big fan at looking at sort of daily highs and lows. How near is the market to the previous high for the day, all that sort of stuff. And this sliding scale you can see on pound US dollar, hopefully that's clear on YouTube. The little arrow thing is right on the low. So it's telling me the pound US dollar is making new lows for the day. If you look at this gold, it's pretty near its highs for the day. This one here, whatever that is, Sainsbury's is in the middle for the day. So I really like this feature just to see what's actually really moving on the day. So the pound has been pretty weak this morning, but let's get into the charts and have a look. I'm going to start off with gold for a while for a change because it has been a bit of a boring market, but it's all changed in the last couple of weeks. Let's just have a look at the big picture. Gold. If we scroll this out a little bit, there we go. We go back over the last 4 years or so. So we've seen the market. It's been as high as sort of 1390-ish, 2014. Sells off to 1050 in December. Back up again to these highs, 2016. Back down, back up again. So this whole, 1360 to 1400 has been a real problem for gold, and it's been under pressure since April of this year. Let's just pick up on that. So we've had this downtrend in gold that's looked something like that. Let's just chuck the latest data out of the way for a second. So we've seen the market really under pressure, gone from 1360, gone as low as 1160, so a 200-point fall. So what's that, a 15% slide since April. And it's been boring, okay? For the last couple of months or so, it's been pretty boring. We saw that a new low for the move set in the middle of August, and then it's traded sideways. It's tried to rally, but 1210, 1220 has been a real problem, and we've had this trend line just keeping the market down until, there we go. This is where we are now. This is why I think it's interesting. This is the first time in 6 months we've seen gold break out of this trend. So a market, a level that it couldn't get through, it's all changed. And clearly, what we saw with stock markets last week has helped. The stock market uncertainty, big sell-offs. Gold is traditionally a safe haven. So in times of trouble, if people are thinking, well, actually, I don't have my money in the stock market, I don't have my money in the dollar or whatever, I want to dump it somewhere safe, gold has traditionally been the destination for that. So I think it's interesting the breakout we've seen. So it does suggest this downtrend is over And maybe, and the maybe bit is important, maybe we're going to see the start of a much deeper, stronger recovery for gold. But I'd also put a bit of a caveat on here. Just because it's broken out this trend doesn't mean that suddenly it's going to go from where it is now, 1227, up to 1350 in a couple of weeks. I think what will be interesting will be, okay, we've broken out, it starts to sell off. Where does the sell-off halt? Because what we want to see is people jumping in ahead of these old levels. So I think that's the trading opportunity for gold for me. It's not necessarily buying up here, because my stop loss, the closest I've got my stop loss, is probably below these old lows, just below the breaks, before the break. And that's about nearly $40 away from where we are now. So I think the opportunity is, if we see it under a bit of pressure, let's say it dips back to the low 1200s, this sort of area, do we see the buyers come back in and lift the price up? But I think gold now is a really interesting market to watch, after being pretty boring for the last couple of months. But this breakout, it's a big one. It's hit its highest levels since July the 25th. So what's that? Nearly 3-month highs, 2.5-month highs is what we've hit. So it does look like we've seen some real strength in gold. On the RSI, it's getting pretty near overbought, which is not surprising. It's moved $40, $50 in the last couple of weeks or so. So it's not surprising that we're approaching overbought on the RSI. So it does suggest that maybe it is a little bit overcooked in the short term. Maybe you want to see it under a bit of pressure, come back to here. But gold, I think, is a really interesting market to watch. In terms of events that are going to affect the markets, we could have maybe a quiet afternoon ahead of us, because tonight, I think it's 7 o'clock UK time, we've got the latest minutes from the Federal Reserve in the USA. So the central bank for America releases the latest minutes from their last meeting where they raised rates. So we could see markets just sort of marking time until those come out this evening, get those out of the way. We'll see what happens. But gold, I think, definitely an interesting one, again, to keep an eye on. Let's take a look. Let's do oil, actually, because we normally do these two together. So let's take a look at the oil price. Where my I haven't logged in. That's why I was wondering why I couldn't see all my favorites here. Hold on a second. Logged in. So oil has been under a bit of pressure, and clearly there's the political situation with Saudi Arabia at the moment is sort of hanging on the oil price, where we had a journalist that's gone missing, presumed to be murdered, and we were trying to get to the bottom of that. And Saudi Arabia is saying, well, maybe, if other countries decide to impose sanctions, they might retaliate with something to do with oil, maybe holding back on the amount of oil production. So we're seeing the oil market somewhat marking time ahead of that, but ahead of what's actually going on there. But let's look on the daily chart. Let's just remind ourselves of the big picture for oil. We are still in this trend. Started June of 2017. I think that trend is still going. Hang on, if I could actually draw it properly. There we go. So we're still within that trend, for my money, and it needs to break. This is US oil we're looking at. I think it needs to break. Let's get rid of the MACD, give us a bit more room. It needs to break below at least, I'd say, $66 to $67 to suggest this trend is ending. So for now, any weakness in oil, back to the mid-60s, still is like a buying opportunity. But it hasn't actually done that much this week. But for me, that trend is still up. So the risk is that bang, it goes up rather than down. So for me, the obvious target would be for a run back to those recent highs up around about 77. But let's take a look at the short-term chart. I have traded this a bit this week. I've had 2 profitable trades, but not massively, because I've been trading it and looking off these lows. So whenever we've seen it dip down on Monday and again yesterday, buying in the low 71s, looking to see if we can find some momentum, and it only moves about $1 and then it sells off again. So I think clearly for this week, I think for short-term traders, an obvious level to watch is around about 70. Those lows from the 11th of October. It has so far proved to be something of a floor under this weakness, but it's really struggling to find much momentum at the moment. So it's maybe a little bit boring price of oil, but that big trend is still very much in place. Let's take a look at the pound. I think this is, for me, actually, because there is a lot towards this week, but maybe the more immediate one is the pound. We did this market outlook on Monday, and just walk through what happened over the weekend. So the Brexit negotiations between the UK and EU resume again today, I think. But over the weekend, we had the news that there hadn't been any progress on the Northern Ireland border. And this is a major sticking point. And that news broke over the weekend. Clearly, the market couldn't react because the market was shut. But before all that happened, going into the weekend, the market looked like this. So this is Friday's close. So we had this trend that had been in place since the 4th of October. So we were almost a couple of weeks, 10 days into that trend. So the expectation would have been coming into this week, if that Northern Ireland news hadn't broken over the weekend, looking for the market to bounce. What happened on Sunday was this. Let me just zoom in. So not surprisingly, with that negative news, the market gapped lower in Asian trading on Sunday night. So it finished on Friday at about 131.50 pound US dollar, and it started first trades going through at about 130.85 on Sunday night in Asian trades, so about 9-10 o'clock UK time. So it was a big gap lower. And on Monday, I was saying, well, we had seen the market react. By the time we did the webinar on Monday, about 12 o'clock, we'd seen the market, so let's jump forwards in time, hold above those Asian lows. I said, well, maybe that's the low for the week. Maybe we've seen that reaction, that knee-jerk reaction on Sunday night, and the market had pushed back into the range. This has continued. This continued up until yesterday. Let me just flip this out. There we go. We saw the market push as high as 132.35 yesterday, but it really has fallen off a cliff. And I think it makes it interesting now going into this afternoon. And we had that inflation data out this morning for the pound. Inflation was a bit lower than expected in the UK. But what's interesting here, let me flip this back to an hourly chart, is what happens now near these lows. So for me, big level to watch is 130.80. So that was the low set on Sunday. At the moment, the market's trading at 131.02. So we're only 20 points above that low. So if this weakness is gonna turn around anywhere, we're getting close. So I think this is a market to watch this afternoon, see what happens. I think if we start to lose that Asian low, then we're setting new lows for the week. And clearly the market's under some pressure. Maybe it'll trip off some stop losses if we start trading much below 130.80. And I think we've got to start looking at these old lows in the second week of October, around about 130.25. But I think pound US dollar is an interesting one going into this afternoon. We do have those Fed numbers, those Fed minutes this evening. At the moment, it is very oversold on the RSI, so that does add argument to some sort of bounce or rally from there. We'll see what happens. But I think keeping an eye, if you're trading pound US dollar this afternoon or tomorrow, assuming it holds, keeping an eye on that 130.80 area is a big level to watch. So I think it's an interesting one. Going back to the bigger picture, I think we're still in this recovery just about off these lows from August. So I think the bias is still up for pound US dollar. Clearly 133 through to about 134.80 has been a real problem for the last 3 months. But let's see what happens this afternoon down at these levels, these lows from Sunday night. Let's have a quick look at the euro dollar. Let's flip this over to a daily chart. So like the pound, I think we did see the euro. It's been a really quiet few days. You can see it here. It's just the last week, just how pretty flat the euro has been. So like the pound, it did gap lower on Sunday night. But it's just sideways, the euro. It can't get much above 118, 118.50. There's loss of support from 113 to 114.50. It's just a little bit boring for euro dollar. Let's take a look on the hourly chart. Here we go. So we're just now pushing below those lows from Sunday night on the euro. We still have the lows left just about from October the 11th and October the 12th. So let's see. Let's see what happens. Let's see if we see the buyers come back in here, because it has been good support in the short term. But maybe we're just seeing a bit of nerves ahead of this release of the Fed minutes this evening. Maybe the more sensible approach is to let the Fed minutes get out of the way, see how the markets react, and then get back into looking for some trades. Then it's always a bit odd, I think, ahead of these sort of major announcements. So that's euro dollar. I think pound US dollar is the more interesting one. Someone's asked about cryptocurrencies. Which bitcoins can I invest the best? Right, I think, right, personally, while the future might be cryptocurrencies, I think all of the momentum and everything else has just disappeared from these markets this year. You know, we get the odd surge now and again, like we did earlier this week. We saw Bitcoin go from 6,200 to 6,750 in a couple of hours, and then give up about half of those gains. You know, if you look at the bigger picture, it's just a boring market. Yeah, it's a very different market from back then, and I am by no means at all an expert on cryptocurrencies, but I am, you know, I know a dead market when I see one, and I think this is the problem for a lot of these cryptos. There's just boring markets. Yeah, so I've got absolutely no idea which is the best one to invest in, but it's just pretty boring and pretty dull. You know, for Bitcoin, there's been this floor all this year from what 5,006 through to 6,000. You know, that has propped the price up, but it just struggles to make any sort of decent progress. I'll have a quick look at Ripple, then we'll get back to other markets. To look at what I never look at these things, to be honest. There we go. We had that surge over the weekend, didn't we, a few weeks ago, and again, it's still above the lows for the year, but it's still giving back a chunk of those gains. So I just think they're boring, to be honest. There you go. That's what I think. So let's go and look at stock markets, which aren't boring. We'll look at the S&P, we'll look at the Dow, look at the Nasdaq, we'll look at the DAX. So let's flip this out to a daily chart. So we saw these massive sell-offs last week. You know, we saw just the market really under pressure. There were lots of things behind this. You know, clearly there's a classic market cliche that bull markets climb a wall of worry. You know, and the concern always is, are these markets going to crash? You know, when markets are going up, and we've had that for years and years and years, and the markets have just continued to move higher and higher. You know, we did see this massive sell-off last week, even bigger from a one-day move point of view than what we were seeing back in February. It's definitely put this I think it has actually fallen out of this recovery trend for the S&P. Let's pick up on that. There we go. So we've gone clonking through there last week. It traded as low as almost 2,700, 2,710. So it's off. What's it off? Well, 10% move since the highs beginning of October. Yeah, that is a chunky old move. Stock market's down to here. You know, very violent move. Let's see what happens next. But for me, I suppose the big support on the daily chart, clearly 2,700-ish. These old lows from back here, the end of June, 2,690 and 2,678. Let's look at what happened yesterday. I think we've almost got to take it day by day, markets like this. The move we saw yesterday was a positive one in the S&P. Since it had fallen off a cliff, it had struggled to find much momentum through 2,780, 2,800. Whereas yesterday, this is an hourly chart we're looking at, it went up every hour. It was every hour. It just went higher and higher yesterday. So we saw a real decisive move yesterday in the S&P. Whether this is enough to get that trend back on track, I think remains to be seen. But I think, you know, the approach for me for this afternoon will be looking to buy any dips. You know, clearly there'll be a lot of people, me included, who missed out yesterday in that move, waiting for the pullback. So let's see what happens this afternoon. If it does sell off, do we see buyers come back in, push back up to 2820? But I think the fact it's broken back above 2790 to 2800, which it struggled with over the last few days, that is a positive sign. Okay, and for me, I'd be tempted to be buying the dips, and only if it breaks below that big sell-off low, which is a long way away, at 2710. So I think you have to worry about this market sort of falling off a cliff again. So a bit of relief yesterday for anybody who was worried about how their portfolio was doing. You know, we have seen this market break back above some recent barriers. Let's look at the Dow. I'm assuming, there we go, the Dow did a similar sort of thing. I don't tend to watch the Dow, it's the S&P I tend to watch. So again, on the Dow, really struggled with sort of 25,600, 25,700 area. Broke higher yesterday. That is a positive sign. The lows are in at 24,900 to 25,000. Let's have a look on the daily chart. So that the recovery trend for the Dow is still intact. All right, so there's our Dow trend off those February lows, coming in around about 24,200. So that is still intact. And the move yesterday does suggest that maybe some of those nerves have left the market, and it's a little bit calmer. Let me find my Nasdaq 100, because it was the tech stocks were some of the hardest hit last week. So let's just have a quick look at how the Nasdaq looks. Then we'll have a look at the European market. We'll look at the DAX. So again, if we were going to look at the similar sort of thing, the recovery off those February lows, that trend on the Nasdaq is still intact. So it's only the S&P, the broader market, that broke below its recovery trend from Feb. The Nasdaq and the Dow still very much there. Really big move for the Nasdaq yesterday. If you flip this over to an hourly chart again, the Nasdaq, broke above 7160, that sort of area, like the S&P, just went up all day. So again, for me, it does suggest we have got some positive short-term momentum in these markets again. So even if we start to sell off, we're looking for strength to come back in. But like I say, it might be a bit of an odd afternoon because we've got this Fed announcement at 7 o'clock tonight. And then finally, the DAX, the German 30. The German 30, I think I've probably said this before, this is one of our most popular markets. It's the one that we tend to see the most volume on. This and gold tend to be really popular month on month. And the DAX really hit hard last week, a 20-month low where it went to. So 11,400 to levels we hadn't seen, maybe even lower, seen since actually the end of 2016. So end of 2016, early 2017. And we have been sort of tracking this thing. Where is it? This downtrend that had been in place for the DAX since June of this year. It's still holding the market lower, but as with US markets, strong move yesterday. Let's see what it's done so far today. It has sold off. We are seeing a bit of stability coming in ahead of 11,680. So I suppose the aggressive trade, if you thought, well, actually, this is the start of a much bigger recovery, one aggressive trade is a buyer now with a stop loss under the lows from a couple of hours ago. It's maybe not a trade I would do. It's maybe too tight, that stop loss. But 11,680 will be an interesting one to watch this afternoon on the DAX, assuming we're going to see some more strength from US markets. But stock markets looking not quite as negative as they were to the end of last week, considering the breaks that we saw yesterday for US markets. So we'll start wrapping things up there. But I think, like I say, the interesting markets to watch for me, gold is the obvious one, because it's broken out of that 6-month downtrend. That I delete that arrow every week. It keeps coming back. So it's broken out this downtrend. The question for me now, it sells off. Where does it stop? That's what I'm looking for. So where do the buyers come in on any weakness? And pound US dollar going into this afternoon, because it has had quite a reversal since 2 o'clock yesterday. We have these lows in at 130.80 on Sunday night, then it moved away fairly quickly. Are we going to see the same thing happen again? So I think there's a bit to keep an eye on. And then we've got the Fed minutes this evening, and then hopefully we have more normal trading after that. That's it for this week. Not this week, for today. We'll do this all again on Friday. So if you want to see how this all turns out, we'll do it all again Friday lunchtime. Like I say, we're going to do this Monday, Wednesday, Friday for a few weeks to see how much interest there is. Any questions, you can drop me an email, david.jones@capital.com. You can follow me on Twitter for market updates, and to find out more about the company, just go to the website, Capital.com, and there's lots of information there. And you can open an account, open a demo account, all that sort of stuff. But we will stop things there for today, for Wednesday, and hopefully if you're around on Friday, we'll do it all again.